The Fed has been raising rates aggressively to tame inflation since its meetings in March of this year. The last two meetings have seen large 75 bps per second hikes, and we could see another when the Fed sets rates on September 21st. Futures markets currently give a 9 out of 10 chance that the Fed makes a big 75 bps per second move, with a small chance of 50 bps per second. These hikes may seem at odds with recent inflation data, as most readings and forecasts of inflation have declined significantly and since July. However, the Fed is looking past the swings in energy prices and still worries about underlying trends, such as in food, where prices continue to rise. For now, the U.S. inflation picture is somewhat encouraging. Energy, which was a major factor in rising prices, has fallen in price over recent months. Given energy can have such large swings in price compared to other goods and services, prices moves for energy can be enough to drive the tone of the overall inflation report, as we're seeing currently. There are also signals that house prices are starting to decline, and that some of the products, which contributed to the inflation surge, such as used car pricing or elevated freight costs, are now going firmly into reverse, driving prices down rather than up. Plus, a very strong dollar is driving down import costs across the board. However, here's the challenge for the Fed. Their target is not to see inflation coming down from its current level of around 8%, but for inflation to be firmly anchored at 2%. Those are quite different goals. The difference between knowing something is falling and knowing precisely where it will land. We're a long way from 2% inflation currently, even though prices are falling, and even if inflation were to fall to say 4%, then the Fed would still have a significant problem. That's why inflation falling is not enough, and why the Fed is still on course to hike for now. The Fed needs to be confident we'll get back to 2% and excess inflation won't persist. This was the key point of Powell's Jackson Hole speech in August 2022. Nonetheless, the market believes the Fed will have more of the data it needs to change emphasis relatively soon.